Hi, everyone. Thanks for joining us. As many of you know, India is a laggard in Asia when it comes to many things, economic development, social indicators. I recently moved there 3 months ago myself, so I'm seeing a lot of this firsthand. But one of the things that's really striking is that India is actually a pioneer in the world of FinTech, and there has been an extraordinary policy effort in recent years to roll out some extraordinary infrastructure that you really just don't have anywhere else in the world. And the potential to grow in this industry there is attracting some of the biggest names in technology from Asia and in the US, both as investors and as participants in the market. So I'm really lucky today to be joined by Alok from IndieFi and Alok from Policy Bazaar. I have two Aloks. Not everyone in India is called Alok. But these guys are old friends, so this should be fun. I'm just going to let both of them start by telling us a little bit about, very briefly, about what their businesses do to set the context.
Thanks, Una. I'm Alok Mittal. I run IndieFi Technologies. We are a platform for small business loans, so we act as a marketplace between institutional lenders, banks and non-banking lenders, and small business borrowers. And really, the approach we are trying to take is to treat different segments of small businesses differently, in terms of product design, in terms of credit design, and so on. So we believe that small businesses are inherently heterogeneous, and we are building a platform that addresses their credit needs in that context.
Hi, I'm Alok Bansal. We run a marketplace model for insurance transactions. So anyone who wants, any retail customer who wants to buy any insurance product, whether it's life insurance, health insurance, for that matter, motor or travel, they can come to the platform, go through the transaction, and buy the policy by comparing and doing everything on the platform itself. We've been doing this for little over 9 years, and now we are starting to participate in a little bit of product creation and controlling the process at our end, which till date the insurance companies were doing at their end.
Okay, so thanks, guys. I must start by asking about this fintech infrastructure that's in India. How does it really stand out from what we have anywhere else in the world? I mean, I wonder if you could just take a moment to explain what we have there.
So one of the important things, although India is such a large and diverse country, but we have single regulator, and everything in fintech is regulated. So if you look at countries like US or for that matter even China, a lot of times you have to go province by province or state by state. But in India, you can get a pan-India license if you go to the regulator just once. Having said that, the regulation itself is evolving very fast, and whether it's the introduction of UPI-based payments, or whether it's the way the business models like ours have evolved, regulator has played a large and mostly supportive part.
I mean, so what you just mentioned, UPI and Aadhaar and all these things, I mean, these are government-sponsored pieces of real estate. I mean...
So what's happening in India is that there is massive infrastructure development by the government, right? And it's not just a capital issue of who invests the money in that infrastructure, but it's an adoption argument. So over the last 4 years, 1 billion people in India have been converted from having no identity at all to all having a uniform identity that's real-time queried at literally, a cent a query.
So this is basically like everyone in India has a fingerprint
unique identity,
and an iris scan in a system on a 1 billion people on a unique identity database.
Now, what they're doing is they're layering other infrastructure which relates to financial services on top of that, right? So there is electronic signing infrastructure that is now layered on top of that. There is the payment infrastructure which is, surprisingly works across all banks in real time for remittances that might be sub $1. So it's a very efficient, frugal infrastructure that exists for that. There is a data interchange infrastructure called consent architecture that is coming up. So for a company like ours, we don't have to worry anymore about putting the plumbing in place. All of that is coming into place at a very rapid pace, and it's enabling a lot of innovation on top of it, because entrepreneurs can now focus on solving the market's problem rather than solving for the infrastructure.
I mean, that sounds to be quite different from what we've seen in other markets, because in India, the government itself has built or has taken the lead in building a lot of this infrastructure and has made it open for everyone.
It is open. And because of the fact that there is a single regulator, basically all financial institutions have been told you got to comply tomorrow. Right. So the adoption has really accelerated because of that. So today, all banks in India would be enabled on UPI. 95% plus citizens are covered under the unique identity scheme. and that's going to reach 100% very soon. So we don't have to worry anymore about knowing the customer, about execution of documents, about remittances being made. Right? At one end, you could argue that those things have moved from potentially private domain innovation to public infrastructure, but it's just enabling so much more innovation on top of it. It's mind-boggling.
Just to bring that to life, I mean, it means that, if I go out to buy vegetables, just from like a street side stall, a guy with a cart, I can go up to him with my mobile phone and I can pick whatever I want off the cart and I can pay him. I can just put my email address in, zap it to him, and he's got his money straight away. And I don't, and it doesn't matter if we both have different banks. It's kind of extraordinary.
No, some of the other things, I think, government has created a lot of these services, but they are not making it compulsory. So government took a step to create something called RuPay, which is a competitor to Visa and MasterCard. It's got about 30-35% market share, but it's competing with the both of these platforms. So there's no mandate that you have to use this only. So government, in fact, is trying to be as efficient as the private sector. Similarly, on the UPI platform, they've created an app which is can be used by any platform that want to use it, but again, not mandatory. So that's the good part about it. It's so you're not bearing with the inefficiencies that a government system can bring, and hopefully they'll continue to challenge the private players.
Yeah, I mean, one of the things that how is that helping your businesses? Maybe you could tell us a little bit about what that's helping your business do now and where it can take you.
Yeah. So we are in the small business lending domain, right? And we normally go to borrowers who have traditionally not been served well in terms of their credit needs from the market. Now, most of these people would not have a formal banking history. 2 years back, they would not have a formal identity. So there was a lot of on-ground work required in going and identifying the customer, in ensuring it wasn't a fraud, in even getting money to them, right? Now, all of that has gotten streamlined. So today we support instant loan process, right? And the trick about instant is not instant decisioning. That's the easier part about instant, right? The trick about instant is all the process that sits in front of it and sits behind it. And we work with the largest banks in the country, right? So they, from a compliance standpoint, are very, very rigid about what they'll accept or not. But today we can get a customer on board, right? Do an electronic KYC in real time. We can pull data from partners with consent from the customer in real time. We can decision in real time, and then we can get documents signed and make the disbursement in real time. So literally within seconds, right? The whole process is done with full compliance as per the banking norms, which would have been impossible a couple of years back, right? It would take at least a week to get a loan done if you were talking about a tier 3 location because of all the papers flying around.
Yeah. And for you, I mean, how has this helped? I mean, it's been around your business. Your business is a bit more established. It's been around for a bit longer. I mean, how has the sort of like FinTech enthusiasm helped policy?
I think the biggest benefit to us is ability for customers to pay online. So we don't take any cash or check any other source. So everyone who's coming to the platform has to pay by credit card, debit card, or net banking. And since the usage of these have gone up because of a lot of initiatives the government have taken, that obviously has helped us. In terms of process also, sometimes whether you are establishing the KYC, whether you are looking at what sort of documents were asked earlier compared to what we are trying to implement today, that has helped. But in our case, specifically to look at the insurance part, a lot of the initiative has to be taken by the regulator also. And they've also tried to push the internet-based sales a lot and ease out the process as much as possible, given the constraint that we work with.
I must ask you, you're sort of eyeing an IPO in 2018, or it has been said. What is the process like for a company trying to, at your stage of development in a vibrant emerging market like India, trying to go public?
So Indian equivalent of SEC is a regulator called SEBI, and you have to go through SEBI regulations to understand what exactly is required there. One of the things is profitability for last 3 years.
So you need to be profitable.
Which SEBI on its own can let go, but that's the basic norm today. Another thing is the sort of promoter share and the thinking around the pricing of the individual shares, retail pricing. So some of these things do not really apply to a private business like ours. So you have to make changes to your structure and to your, overall cap table to accommodate these sort of requests.
Do you think we'll see do you think we'll see Indian companies eyeing New York markets in the same way that we've seen Chinese companies flock to the US?
I'm not very sure about the fintech sector going outside India for listing. 2-3 reasons. A lot of these businesses are India specific. So if your brand is known in India and your customers are based out of India, it makes more sense to list in India. The liquidity is not a problem anymore. The second would be a lot of times regulators might also have a say in where you list, because for someone who is participating into insurance sector, going outside India for listing is almost impossible. The regulator wants to control a lot of stuff. They even want to control where you host your website. So I'm not allowed to host outside India. So I don't really see them allowing me to go for IPO outside India.
Right. And I mean, in terms of attracting investors now in the current climate in India, we sort of saw a lot of excitement about Indian startups and fintech companies sort of building over the last couple of years. I think the atmosphere recently has been a bit sort of sketchy. What is the environment for fundraising like in India at the moment?
So, I've been in the venture capital industry for over a decade now. I would qualify today's environment as fairly healthy, where, good companies are getting capital, but there is not a deluge of that. I would argue a couple of years back, there was too much capital in the market. So today, if companies that are executing well have enough access to capital, both from, international money, but also there are strong pools of domestic money that are beginning to develop. And I think at some level, they provide confidence to international investors as well. So it's a healthy environment. I think in terms of the IPO markets in India, that has always been a challenge, right? Because the IPO windows tend to be much shorter than you would see, let's say, in the US market, right? Our bubble starts 12 months after the US bubble starts, but we crash at the same time. So I think the IPO liquidity is the challenge. So there is a healthy base of companies that is beginning to perform. But I think from a fundraising standpoint, we look like we're in pretty good shape right now.
We've seen in the last year, we've seen SoftBank, Alibaba, Tencent, Facebook, WhatsApp. I mean, you name it. Everyone, the who's who of global technology is piling into India. I mean, is this a good thing for the market?
Yeah, I think there is a quality difference between the names that you mentioned and the first generation names that we saw coming into India, right? Initially, there were a lot of US players who were coming into India with the pure intent of investing.
So you mean like financial VCs, guys, yeah.
Right. Now we are seeing a lot of corporate interest, which is, people who are looking at the Indian market from an ownership viewpoint. So my sense is that many of these companies that you mentioned are going to land up being big owners of technology-driven businesses in the Indian market, and not just investors there. So what they bring with them due to that viewpoint is much deeper pockets and much more conviction to stay invested in those businesses. As also, I would argue, much more participation in those businesses on operating level as compared to the purely financial investors.
But what does this mean? Does this mean that India is not going to have a chance to have its own homegrown players? I mean, in China, it's an entirely Chinese affair. I mean, in India, are we going to see foreign capital drown out the local players, and these big guys come and sort of like run the businesses?
So the entrepreneurs are still the Indian entrepreneurs. The companies are still Indian companies that they're running. But a lot of our companies that have grown up would have majority foreign shareholding. India has traditionally been fairly tolerant about capital flows in and out, at least for the last 20 years since we started to open the economy up. So there isn't xenophobic attitude towards saying are foreigners owning our companies. I think we are happy taking pride in the fact that these are our companies and these are our entrepreneurs, and they act as role models for a future generation of entrepreneurs to come up. So, in some sense, we would tend to qualify these as Indian companies, even if they land up being majority foreign-owned.
Yeah, I mean, I would make the observation, and I won't quiz you on it, but as many of you know, India and China having some interesting border skirmishes at the moment, and it's quite interesting because we've seen a lot of Chinese capital come into India for the first time, and it's particularly come into the tech and the fintech space, and I think that's an uneasy relationship, and it will be interesting to see how that plays out, because it's not a reciprocal relationship. So that's just an observation.
Somewhere, for Indian money to start playing into these markets, you need Indian entrepreneurs to make that money first. And as Alok just mentioned, if your company is majority owned by US investors or any foreign investors, even if you have a liquidation event, the bulk of money is made by them. So you don't have that huge amount of pool of Indian money which is ready to get into the digital sector as such. But having said that, there are a lot of family offices who are interested. The ticket size varies and their risk appetite also varies. And they will be little late to the game. They will typically not come at the seed stage, but they still want to drive a bargain somehow. And overall, if you look at the fintech sector, a lot of times because you have FDI regulations, they get a chance to have some say there. Right. But the amount of capital available from foreign sources is definitely much, much, much higher. It gives you not only the capital, but also a lot of ideas about what's happening across the globe, which maybe you can incorporate in your business model. And those contacts are very, very helpful, which a lot of times Indian money may not be able to provide.
I'm glad you raised that point, actually, in terms of what, because we just talked a little bit about what the rest of the world can learn from India with all this infrastructure. But in India itself, I mean, what is the state of regulation and data protection like? I mean, what are the points that India really needs to improve on in terms of, strengthening its FinTech foundation?
Yeah, so I think the regulation in India tends to be fairly strong, right? Partly because there is a single regulator, but also because single regulator in banking, single in insurance, but not state-wise regulations. But also because most of these regulators tend to be progressive. And they will allow a certain degree of innovation to happen before they translate into systematic risk, which is when they want to come in and regulate that, right? And that's a fair call. On the data privacy side, I don't think we've been as strong. And a lot of those concerns are now coming into the forefront, also because some of the public infrastructure that we spoke about is creating its own set of security risks. Yeah. Right? So for example, I'm part of an initiative called Future of Finance, where the central point is, who owns data, how should we protect it, what should be the obligations of people who are essentially custodians of data. So there is growing consciousness around those things, but I think from a regulatory and infrastructure standpoint, I would rate it as an A+ market.
Do you think we'll see a comprehensive data privacy law in India at any point soon? It sort of doesn't exist at the moment.
I think we will. We will, at least with respect to all the activity that's going on in technology-led businesses. And do you think it will be flexible enough to allow both of you to continue to tap this amazing opportunity that's out there? Regulations are not flexible. Entrepreneurs are flexible, right? So we will figure out a way to work with them. But I think it is a long overdue regulation, not just because there is so much data sitting out there, but also because most of our customers are data illiterate, right? So they're not necessarily educated and informed about how they should protect their own data. Right. And in that kind of an environment, I think it is incumbent upon custodians of data to exercise that responsibility. Otherwise, you're just waiting for a big blow up to happen, which hurts all of us. I mean, it's a bit of a kind of paradox, though, because, I mean, the drive to develop and to move quickly is there, and it's helping India to leapfrog and solve many social problems. But the privacy concerns are lacking. I mean, given that you've thought about some of these issues, I mean, if there was a model to sort of look to for data privacy laws, I mean, who has a good model for this sort of stuff? So I think the data privacy models are very sensitive to the social environment you're talking about, right? And to the underlying data literacy of your consumers. So I don't think there is a comparable market. There is also a trade-off between how strict you want to make data regulations versus how accessible you want to make innovation to people, right? So there is that balance to be struck. So my sense is that we will come up with something which is fairly unique to the market that we operate in, and that allows enough room for innovation at the same time protecting the interests of the consumers. I mean, that's gonna be the real key, right? The sort of balance between innovation and regulation. Yeah. But so far, I would argue that we have struck a fairly good balance on that count. Great. Well, look, thank you very much, guys. That's really, I'm really thrilled to have been joined by you guys today, and I think India has really got a very exciting story in FinTech to tell. So please watch this space. Thank you very much. Thank you.
Thank you.